This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Well, good day and Happy New Year to everybody from the Iowa Agribusiness Radio Network. Thanks for joining us here on Ag Matters PM. Today is Tuesday, January 3rd, 2023. We're glad you could come along with us today. My name is Dustin Hoffman. Again, first program of the new year. No more blizzards, hopefully, for a while. With Christmas and New Year now behind us, we're back in the swing of things here at the network. Coming up here a little bit later on, I'm going to talk with John Monson of Compeer Financial as we talk about the symbiotic relationship between rural communities and farmers and how they both need to be strong if they're going to carry themselves into a future with some uncertain economic situations. We'll also look at that ag weather forecast as we did see some interesting weather to start this week. But first, let's run down those markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Well, we're at the end of the first trading session of 2023, and we're talking with Robin Schmahl of agmarket.net. It was not a pretty start, Robin, to the trading year. What did we see in those grains?
Yeah, no, for the new year, it was kind of a little depressing. There's always some hopes that maybe a new year bring things better, but that wasn't the case today. Now, we had a couple of things that put pressure on China. Demand is a concern ongoing from last week, with the rise in COVID cases, what their demand would actually really turn out to be in the near term. Now, that put pressure on not just grains, but it put pressure on most of the commodity markets. Financial markets as a concern running off of that as well. Now, then on the soybean side, we did also see good rains, or at least some rain in Argentina over the weekend, which, provided some relief, but the 6 to 10-day forecast is looking at hot and dry yet. So that may not be a real turning point in that. It's kind of like holding things at this point in time. Now, Brazil is seeing favorable weather. So things are moving along pretty well there. Now, the new ag minister for Brazil, he came out and made the statement that they're going to be looking at more sustainable agriculture. He's going to be pushing for. He did make the statement that in the years to come, they might be able to double their production with sustainable agricultural practices without even having to clear any more land. Now, whether that how that progression will be made or whatever is hard to say, but a couple of those things coupled into the market, plus export inspections were low across the board. Corn was at 26.3 million bushels, down 10 million bushels from last week. Beans at 53.8 million bushels, down 11.5 million bushels, and wheat at only 3.1, down 8.4 million bushels from a week ago. So they did not start out, that report did not start out the year very well. Of course, it was from the previous week. But what's interesting, also, when we looked at commitment of traders for last week, corn, the funds increased their long positions by 50,112 contracts in corn to bring their net long positions to 163,666. That's pretty noteworthy that they increased them that much. Now, soybeans, they increased up 2,518 to 129,244 net longs, and wheat was up 7,915 to 130,316 net long positions. But the increase in corn was pretty substantial and surprising. But as of running through today, we had a little more weighing of the negatives against the positives. So that's what ruled today.
And it looked like that's what happened on the livestock side of things too. Normally when grains are down, they usually try to take advantage of some cheaper feed prices, but just too much negative pressure on the whole market in the whole marketplace, correct?
Yeah, the real standout in the cattle complex was the pressure on feeders despite the low corn price. And that is an indicative of all of the pressure that's running through the commodities today. And with that pressure on there may be some spillover or some continued pressure on the overnights into tomorrow. It probably won't turn around very quickly, but yeah, and the cattle are struggling also from that outside pressure, even though choice cutouts at noon were up $4.88 and select was up $4.08. And that's huge. I mean, we saw some strong box beef prices last week, and to see it come out of the box after the 3-day weekend with that kind of strength, that should have really pushed the feeders and live cattle higher, but they could not overcome that outside pressure. And on the hogs standpoint, we did see weaker cutouts at noon today, down 74 cents. Fear of demand being not as good coming through the holidays as they would have liked to maybe see. We're going to see as retail places more orders, to see traders are waiting to see how much of that pork demand there was. But at the present time, there's fear that it hasn't been as well. And so the pressure or path of least resistance was lower because cutouts just are not doing very well.
All right. Well, Robin, if folks want to talk about some market strategies and how they can plan for whatever we've got coming, because we've got the big, WASDE report and quarterly grain stocks and the ending grain stocks report, I should say, all that coming up here at the end of in the middle of the month. Folks want to be ready for that. How do they get in touch with agmarket.net?
They can call me directly at 877-256-3253. They can go to our website at agmarket.net. Phone numbers on there that they can reach any one of the brokers in the office, and we'd be happy to work with you.
All right, Robin. Well, we thank you so much for the insight, and we'll talk to you again real soon.
All right. Thank you, and have a good New Year.
That again was Robin Schmahl of agmarket.net. Let's go ahead and take a look at the closing numbers, courtesy of the folks at Bar Chart. March corn was down 8 at 670.5. December new crop down 4 at 606 3/4. January beans down 32 at 1487 1/4. November new crop down 19 3/4 at 1397 even. Soy meal down $5.90 at 465.10. Soy oil down 87 cents at 63.20. Chicago wheat down 16 at 782 3/4. Minneapolis wheat down 14 1/4 at 912 1/4. Kansas wheat down 17 3/4 at 864 1/2. Oats for May down 1 3/4 at 362 1/4. Live cattle for February $1.05 lower at 156.85. January feeders down a buck at 182.70. Lean hogs down 262. That's at 85.07. Pork cutouts down 227 at 91.80. Class 3 milk down 48 cents at 19.06. And that's been our Ag Market Recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, I talk with John Monson of Compeer Financial. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, during the NAFB convention in Kansas City this past November, I had the chance to talk with John Monson of Compeer Financial. We talked about the uncertain economic times we face heading into 2023 and how the benefits of farmers and rural communities can work together to help build a stronger economy in those rural areas, one that both can thrive on. And here's what he had to talk about. We're talking right now with John Monson. He is Chief Mission and Marketing Officer at Compeer Financial. Thanks so much for taking a few minutes to talk with us today.
Absolutely. Always a pleasure.
All right, so what we're going to be talking about today is rural vitality, and that's something that, we kind of think about in the back burner, but yet it's something that's so important to the ag industry and to the people who survive off the ag industry. Tell us a little bit about what message you're bringing to people.
Well, having lived in a rural community my entire life and working in across rural America in agriculture for an entire career for 37 years, we've learned a few lessons. One of those lessons is that agriculture is really dependent on strong rural communities. Strong rural communities are dependent on strong agriculture. So with that said, there's a lot we need to do. So we know that there's a lot of infrastructure issues in these rural communities. We know that workforce readiness and workforce availability is a big issue. We know that daycare is a really significant issue in these rural towns. We know that rural healthcare is aging and has a great deal of needs. We can keep going. Entrepreneurs are moving in or want to, and they need financing to be able to do that. They need to be connected. So what do we do about all of these things? Well, first thing we know is, having worked at USDA in a past career as a state director, and now working with Compeer for the last 16 years, we know that it's a team sport to be able to do all of these things. So what does that mean? It means that public, private, nonprofit partners locally, regionally need to come together to be able to provide capital. But we need to learn where it needs to be applied. What are the priorities in these communities? So it really starts with understanding, listening, and learning. And then investing. That brings more of it, more learning. So one of the things we want to be able to do, we already invest in rural healthcare. We do that as a team sport already in rural communities by working with local banks, working with local partners to be able to invest in rural hospitals, rural nursing homes, assisted living centers, so that we can update them, the facilities and the technology. But we also need to be able to invest in entrepreneurs. And when we do that, we see where they go. We see who they need to connect with. We see what services are missing. Maybe it's broadband, maybe it truly is infrastructure. Maybe some of it's just leadership or coaching in the community that needs to be invested in. That's the way that we're going to learn. So it's really an exploratory effort to be able to start somewhere by learning, then applying these lessons, prioritizing our investments and our partnerships and building it from there. So we already do some of this, but we've got a lot more that we need to understand and learn to get started. The needs are greater than what we can do by ourselves, but not too great for all the partnerships we can create.
You know, and you brought up, for example, you know, like health and internet, you know, things like that. Internet, obviously, to keep the students competitive and learning, keep telehealth going on, but it's beyond that too. You've got the fact that schools are needing upgrading or hospitals are needing upgrading to equipment, and sometimes the structures are 70, 80 years old. I mean, you know, that's also part of it beyond the internet part of it as well.
It is, and we can go on. I think we can put together a long list. But the question is, you know, what's the priority? What makes the biggest bang for the buck? Do we start with small things that create small successes to build momentum? Or do we invest big and broader to really start making a broader impact long term? Good question. I don't have the answer to it at the moment, but I do know that we have to begin to learn and understand what that list looks like to begin to prioritize where we're going to start. And it's probably a little bit of both. And if we can do that well, we can replicate and scale that across the territory and share these lessons learned. We've done a lot of work in this already since 2008, where we did something called regional competitiveness across 38 counties. And we learned that people, when they come together, we can determine which areas of industry we prioritize and how we invest together to make a difference. And since then, it's been self-sustaining. Now it used to be all about jobs. Now it's all about workers. We need more people, but and we used to be able to. We had a lot of unemployment. Now that's turned into a case where we have not enough available workforce. So things have changed. So that success also has some challenges that come with it. So I feel like we've been able to do this already, and we can do it again, and we can do it even better. A lot to learn.
How much is it that, you know, obviously we talk about the financial stuff, but how much is also for these rural small towns keeping the kids in the town? A lot of them dream of that big city, big job, not realize they can still do that big job and help out that rural community.
Amen. I hear you. 4 kids in my family all went to the big city to go to college. Here's the great news. They all came back to the rural community, and what they did is what they learned, they brought back to their rural communities, and they're making a big difference. A kid who's a small town banker, who's the head of the Chamber of Commerce in a small town. I love these kinds of stories, doing some marketing in these communities, working in healthcare. All of this stuff matters, but that's exactly the right thing. When you have people leaving the communities, you have a knowledge drain. But here's the beauty of coming back. You can find leadership positions, you can make a difference there. You're going to find more security in these rural towns as well. You can become really active. You can become the local coach. Get on your elder board at your church. You name it. Those opportunities exist. And I think it just takes a little time and they come back. And that's exciting. That story is really exciting to a lot of people that have left town but want to look for those opportunities. That exists in every small town in rural America.
And how can places like Compeer that, you know, do rural investments and stuff like that, how can you interplay with some of these businesses, whether they're the farmer, whether they're the local grocery store, even if it has to be?
Well, I think a lot of it's done through you. We can use our voice and what we're learning through you in order to be able to help share. So I think the more that we work together, you create critical mass of influence and a stronger voice by sharing those perspectives, whether it's by publication, whether by radio, TV, you name it, social media especially. The more that we talk about that, the more I think that it enhances. We want people to be able to come to Compeer. We want them to crawl over glass to be able to get in because they want to be here so bad. We need to make it an energetic environment, and I think all these rural communities want to do the same thing. So let's make it happen by working together to make ourselves exciting and energetic for these for the next generation to come back. But we need them.
And what do you see going into 23? Some of the things that farmers need to know. That's the next step for farmers. What kind of things do they need to be thinking about in some of this difficult time?
Yeah, it is. It's volatile time for sure. Well, you tell me what's going to happen in China and Ukraine and in Russia, and I'll give you some better answers. But I think volatility is probably the word of the day. As a result, I would take a look. If you haven't paid close attention to your input costs, look at them carefully now. Manage those starting now. Second thing, go to USDA, talk to them about their programs. Make sure your crop insurance is in place. Make sure that all your safety nets are in place as we look at the next year, but be intentional about that planning. I think that's the difference here. You can't just ride it out. Days of 0% interest are gone, and with inflation as it is, prices are changing. So just be more aware and more intentional about managing the input side of things than ever before.
All right, John, thank you so much for taking time to visit with us today.
My pleasure.
That again was John Monson of Compeer Financial. Let's take a look at that ag weather outlook. Well, blizzards shut down AMPM filming right before the Christmas break, which we were going to be taking off anyway. And winter did kind of rear its ugly head again on the overnight. We saw ice storm warnings to start the day in the northern parts of the state, dense fog advisories in the southeastern part of the state, winter weather advisories going on now in the north. It's been a wild ride here to start this week. So let's find out what the next 24 hours has in store from the National Weather Service. Well, as we just said, we did definitely have some interesting weather to the north of us here today. We saw ice warnings to start the day in the north, and we, like I said, just a mixed bag of precipitation across the state. Now, that looks like it's going to continue here throughout most of the day, that rain, snow, sleet mixture, and we'll see highs anywhere from the low 30s to about the low 50s. Tonight, the rain and snow mix will continue across most of the state, except maybe the extreme southwest. We'll see lows anywhere from the low 20s to the mid-30s. And tomorrow, we'll see chances of snow statewide, better chances to the north. And we'll see highs anywhere from the mid-20s to roughly the mid-30s. Taking a look at the affiliate weather map, Cherokee will see a 60% chance of snow in 26. Shenandoah cloudy in 31. Des Moines 30% chance of snow in 32. Waterloo 50% chance of snow in 34. Albie a 20% chance of snow in 34. And Clinton 30% chance of snow. They'll be the warm spot at 35 degrees. For more detailed forecasts in your area, tune to your local Iowa Agribusiness Radio Network affiliates. And that's been the Ag Weather Outlook. And that brings us to the end of our first show of 2023. We're so glad you could join us. You can find all our content online at iowaagnet.com. Don't forget to follow us on Facebook, Twitter, LinkedIn, TikTok, and on our YouTube channel. While you're there, don't forget to subscribe and hit the bell icon so you're notified each time we put up a new program. Also, don't forget about our free Twice Daily Market podcasts. You can find those on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson and Riley Smith, we thank you for watching. This has been Ag Matters PM.